even though we got a 25 basis point rate cut, the market failed to close higher for the day. The market went down even after that. There is good news in the market, but the market is not moving up, and this should tell you something. The price action in the market, the up move in gold, that is really something very alarming. Like in the Maharashtra elections, BJP again has secured a landslide victory even in Delhi. So this is definitely a very good thing for the markets in the short term. A lot of things are still going to remain the same. It's just that in the short term, you might see a bit of a positivity in the market. I think it is better to exit your investments in this up move. Hello boys and girls, I'm Paris, the options guy, and welcome to episode number 35 of the No BS Trading Podcast. I hope you guys are doing great and I hope you had a good week that went by. But let's talk about what first of all happened in the previous week with the RBI meeting and the unemployment data that we are going to get. And then we are also going to talk about the major things that are going to happen in the next week, which you should look forward to. And after a while, we are finally getting 2 new IPOs in our market. So we'll also discuss if you should apply to those IPOs and if they are a good bet in which you can make money. So without any further delay, let's just start with the episode. Talking about first of all what happened in the previous week, we had the RBI's interest rate decision that was on Friday, and surprisingly, and actually not so surprisingly, the RBI cut interest rate by 25 basis points. So as I said, that expectations are that RBI would not cut interest rates, but as I said that this is the new governor's first meeting, right? So you should expect a bit of a surprise also if it is, if there is any. So we did get a bit of a surprise rate cut, but the market is still not bullish. So tell me, what do you think about the markets? Even though we got a 25 basis point rate cut, the market failed to close higher for the day. The market went down even after that. So as I've been saying that sometimes the market is so bearish, or not so bearish, but the market is so weak that even on good news like 25 basis point cut, the market doesn't move up, right? So anyways, after that, nothing really important that the governor said. He looked pretty nervous, but I think that was just because he's adjusting to the new, all of being a RBI governor. So since this is his first meeting, and I think that's not really a big deal, but aside from that, he didn't really say anything. He, I think, raised his GDP forecast by a slight bit, but nothing really big also over there. So yeah, after that, in the evening, we had the US unemployment rate data, and the unemployment rate came out at 4%. Expectations were that it would come out at 4.1%, but it came out at 4%. So a slightly better data than expected, but still, if you see even the US markets, they are not moving up. They closed in the red over here. So there is good news in the market, but the market has decided to not move up. Even if you look at the budget announcement, when there was tax cuts announced on the budget day, right, on 1st February, even then the market failed to move up. So there is good news in the market, but the market is not moving up, and this should tell you something. The price action in the market, when there is such good news in the market and the market is still not moving up, there is something which is wrong. And I think one big thing which is telling you that there is something wrong, or something big is coming which is not that good, is the price of gold. If you see, you'll see the price of gold on your chart over here. Just look at how how well gold prices have gone up in the last few days. A continuous up move without any pullbacks and stuff. The gold prices are just rising, through, if you see, from around 2700 to all the way now above 2800, right? Sorry, around 2600, but yes, all the way above 2800. And even right now, the gold prices are not looking like they are going to slow down. So this should tell you something. And I think, a lot of people are thinking that the correction is over. Nifty is down 12% from the all-time high. Nifty will not continue to move down from here. But I think something even more bad is coming. And yeah, you might call me a perma bear or something, or you might call me eternally bearish. But I think, it's just about timing. Because if you if you follow me on Instagram, and if you remember last year when we had the elections, right? On the election day, the results day, the market was down a lot, and I had told you to buy Nifty at 21,800, right? Invest in Nifty at 21,800. And from there, we saw a straight rally up till 24,000. So there are times where you have to become bullish, and there are times where you have to become bearish. And so I think even right now, a lot of people are thinking that the correction in the market is over, but I think there is something really bad coming still. And it is only, and why do I think this is only because of the price action in the market? There is good news coming in the market, but the market is not recovering. Even if you look at US markets, they are also now starting to show signs of weakness. If you look at the daily chart of Dow Jones, Nasdaq, or anything, just open it on your screens and just look at it, you will see that they are now starting to show signs of weakness. So I think this is also a bad thing for us, and not just the US markets, because we will also see pressure coming in our markets going forward. So, and yeah, as I said, that the up move in gold, that is really something very alarming, right? Because gold doesn't rise like that without someone knowing something. Someone might is buying gold big time, right? And I don't know why they are doing this. I mean, I know why they're doing this up to a certain point, but you don't really know exactly, right, what's the problem in the whole system. So I'm not trying to make any sort of conspiracy theories. As I said, I'm just trying to look at price action, because price action tells you everything. The charts tell you a lot of things that you don't even know. And the last thing that happened in the previous week was on Saturday, and that was the Delhi election results that came out, and BJP has secured a landslide victory again. Like in the Maharashtra elections, BJP again has secured a landslide victory even in Delhi. And is this a good thing or bad thing? This is definitely a good thing, because this means that there will be more political stability in the country. And by a landslide victory, actually, I mean that BJP has won 48 out of 70 seats. So that's a very, very big landslide victory. I think Kejriwal, basically the AAP party, lost, I think, 39 seats. If I might be wrong in that exact figure, but basically BJP has won the majority, and by a huge margin over there. So this is definitely a very good thing for the markets in the short term. Okay, keep this in mind. This is a good thing in the short term, not in the long term. So if you think that the markets are going to just keep going up and up again, and now the markets will hit an all-time high, that will not be happening. We sure might see a bit of positivity in the short term. That is on Monday. We can open with a gap up, as opposed to normally opening with a gap down because of the US markets being negative. But aside from that, in the long term, a lot of things are not going to change. Okay, a lot of things are still going to remain the same. It's just that in the short term, you might see a bit of a positivity in the market. So what should you do in this situation? I would say, if looking at the markets, looking at the economy, looking at the overall landscape, the fundamental landscape of how things are going to be in the coming future, I think it is better to exit your investments in this up move if it comes on Monday, right? If we open with a good gap up on Monday, and if we continue to move up, your stocks will also definitely perform very well. So I think in that case, you should definitely think about exiting your investments. And I know this sounds a little counterintuitive, but sometimes not sometimes, but most of the times, when you are doing things against the market, you're not going with the trend all the time. And not going with the trend, by that I mean, is that when everybody is buying, you're trying to sell, like you're trying to exit your investments. That's a good thing. And when everybody is selling, that is when you should start to buy. Now, when on Monday we will be opening with a gap up, and we'll be bullish if we are, by any chance. Okay, now we don't know how the markets will actually react and take all of the news in, so you will still need to wait and look how the market is reacting on Monday. But if the market is bullish, I think you should definitely think about exiting your investments rather than investing more, thinking that the market has now turned bullish and now we will continue to move up. Because short-term momentums like these are actually very good for exiting your investments, because the long-term trend is still in the long term, things haven't changed a lot. I think the economy will continue to slow down. The US economy will go for the worse in 2025, which means Indian economy will also suffer, and collectively the global economy will also suffer. And I think because of that, this short-term upmove that will be coming in our markets, I think that is a good way to exit your investments with not, not sacrificing a lot of gains. So that is it for the BJP, not BJP, but for the Delhi elections. So, anyways, after that, let's move on to what are the major events that are going to come in next week and that you should look forward to. So, talking about what is going to happen in the next week, on Wednesday, we have the US CPI data, and expectations are that CPI will come out at 3%. So, if you remember last month, CPI came out at 2.9%. Now, the expectations are that it will come out at 3%. So, is it a good thing? Obviously, it is not. And I think when we go above the 3% mark, I think then we will see a good panic coming in the market also. So, I hope CPI doesn't come out bad, because if it does come out bad, you will see a lot of sell off in the US markets, because US markets are already near their all time high. So there are still a lot of long positions in the US market, and a bad news at this time will not really be something that will be appreciated by a lot of people. And I think that can trigger a good sell off in the markets. So expectations, as I said, are 3%. Let's see where they come out. And if you look at one thing, is that if this CPI data comes out above 3%, I think then you will start to see early signs of a rate hike also, maybe from the Fed in the coming few months. Okay. So if you think that the Fed cannot hike rates, just look at what happened in 1980s. Okay. Open the Fed funds rate chart. Okay. Just type Fed funds in TradingView and you'll get a chart, and go and look at what happened in the 1980s, right? The Fed increased their rates very fast. Then there was a bit of a pullback in the rates, so they did a few rate cuts, and then the Fed again started to increase rates, right? Because the same thing happened with inflation back then also, that inflation was high, so they had to increase rates. Then inflation slowed down a bit, so they decided to cut rates, but then inflation again regained, right, after that, and they had to increase rates even more, right? So go and look at the chart of Fed funds rate. So I'll also put it over here. You don't have to go and just open it, right? You can see that right now also on the video, and you'll see that, as I said, that this might just be a pullback. So this might be a 1980s style thing where inflation could make a big comeback. Okay. And I think the Fed is also being a little bit, you can say, like, overconfident with their achievement in inflation, because they were also overconfident back in 2021, and what happened, inflation went up to 9%, right? So I think we can see a bit of a problem coming on the CPI front, but hopefully, I hope CPI doesn't come out very bad. But again, if it does, not really, it's something that at least you would not be like completely unaware of, or like unprepared for, because as I've been saying on this podcast for the last like few episodes, that inflation can make a comeback, and as I said, that things might also start to turn around for the worse. So let's see what happens. Core CPI also, expectations are that it will come out at 3.3%. So keep that in mind also, because maybe CPI might come at expectations or below expectations, but core CPI might come above expectations, because of which the market might again get disappointed. So keep this in mind. And on Thursday, we have the PPI data. Previously, PPI came out at 3.3%. Again, PPI is one of those things that has not decided to take a slowdown at all. Okay. And PPI is still pretty high, and that is a problem for the markets. Expectations are again that it will come out at 3.4 to 3.5%. There is not an exact estimate for exact expectation for PPI, but like 3.4 to 3.5% is sort of the you can say market expectation range. Okay, so let's see where it also comes out, and I think both of these data points will have a good impact on what the Fed can do in the coming few months, because as I said, that if CPI comes above 3%, then you can get an early signs of maybe the Fed starting to hike rates again in the coming few months. And I think if you want to know if the what the Fed is going to do with the interest rates, just look at the US 2-year yield. Okay, interest rates most of the times will follow US 2-year yields. Okay, wherever the US 2-year yield goes, interest rates also follow. So look at the US 2-year yields. Okay, if you can find that on TradingView also for free, you can look at how the 2-year yield is performing after the data is out. Okay, and you will get to know how is the market really perceiving this data. Is the market really perceiving this data positively? That is the market expecting a rate cut also going forward, or maybe just a rate pause, right? Or is the market expecting a rate hike? If the market is expecting a rate hike, you will see the yield going up after the data is out. Okay, so both of these data points are important, but aside from that, we don't really have anything else that we need to look forward to. So talking about the two IPOs that are coming in our markets next week, first of all, we have Ajax Engineering Limited. So this is a 1269 crore IPO, and all of it will go to the promoters of the company who are selling their shares. Not a good thing, but again, not a big deal also. Okay, so first of all, should you apply to this IPO from the gray market premium perspective just for listing gains? And the answer to that is right now no, because the gray market premium currently is only 6%, so you won't really get any sort of listing gains. So there's no point in investing for listing gains. But should you invest in this company for the long term? So first of all, let's look at what this company does. So this company mainly is in the business of making self-loading concrete mixers. So you must have seen trucks, right, which have those very big, like, rotating things in which there is a lot of concrete and cement, right? So those are what you call as self-loading concrete mixers. So again, it does not just make those, it is also, it also manufactures products across the whole range of concrete equipments. Okay, not just those self-loading concrete mixers. So as I said, that this company has developed until now 141 concrete equipments. Okay, and as I said, across the whole value chain, this company makes different types of products. And so this company mainly is a sort of a derivative play of the infra space. So if the infra space grows, this company will also grow. So a lot of people right now are thinking that the infra play for India is dead because for one budget, the government didn't announce any sort of very, very big infrastructure projects or something. So that's why, the infrastructure play is dead. But I think the government is pretty, not the government, I'm sorry, the average public or the market is pretty wrong regarding this. And I think going forward also we will focus heavily on the infrastructure. I think this was just 1 year where the government didn't focus a lot on the infrastructure and focus more on the average consumer. But still, I think going forward we will be focusing more on the infrastructure, and I'm going to tell you why. Because you see, as much as cutting tax rates and all that is enough, if we really want to become a very, very big economy, okay, if we really want to get in, like in comparison or in competition to China, and you think that we are in a very good place as compared to China, but we are really not. Okay, because China being a 3 times bigger economy than us, more than 3 times bigger economy, is still growing at 5%. But we are, being at $4 trillion are still growing at just 6%, just a percentage higher. So if you see, as compared to China, we are not doing that great. Okay, so I think if the government really has to do very great as compared to China, then they will need to focus a lot on manufacturing, and manufacturing for mostly exporting, right? And they will only be able to enable this type of large scale manufacturing that you also see in China. Only they'll be able to enable this if they have very good infrastructure. And I think going forward, the government will continue to focus on infrastructure and will spend more. It's just that for 1 year, the infrastructure spends were not like there weren't any major announcements made in the budget, right? So that's why I think the future prospects of the company are pretty bright. There is no problem in that. So how has the company performed in the last 3 financial years? Let's look at it. In FY22, the company made a profit of 771 crores. In FY23, 1172 crores. And in FY24, 1780 crores. So very, very good growth in the revenue. And even for FY25, it looks like the company is going to do pretty great and continue the growth that it has seen in the last 3 financial years. Maybe slightly lesser growth, but still a good pace I think the company will be able to keep in FY25 also. Okay, so profit after tax also, if you see, has grown at a much faster pace. In FY22, 66 crores, in FY23, 135 crores, and in FY24, 225 crores. So the profit after tax for the company has also grown pretty well. So in my opinion, the company basically, and this is one more fact, is that the company basically has a 75% market share in the concrete equipment sector, right? Specifically the self-loading concrete mixers space. Okay, so basically the company has the majority market share, and whenever the company has a majority market share, that is an amazing thing for any company. So I think going forward, the company is poised for a good growth even in the coming few years, and the IPO is also not priced very expensively at all. Okay, the IPO is also, I think, pretty much like reasonably priced. I wish it would have been priced slightly more lower, but even at this price, the IPO is pretty good. Post IPO are getting a PE of 35, so that is not bad at all given the company's first of all market leadership, good growth, and also bright future. So I think all of these three things warrant it to, be this expensive. And so I think you can definitely go ahead and apply to this company for the long term. This can be a very good bet on the infra space. As I said, this is a derivative play of the infra space. So if the infrastructure space grows, this company will also grow alongside. So I think you can definitely apply to it for the long term. Now let's move on to the second IPO, and that is Hexaware Technologies. Now this is an IPO of 8,750 crores, exactly almost $1 billion, and all of it is offer for sale. So this is not such a good thing, but still, I mean, it's okay. Not really, like a very bad thing also. But yes, all of it is offered for sale, meaning that the promoters of the company are offloading their shares. No money will go to the company itself. Okay, so should you apply to this IPO for listing gains? The answer is no, because the grey market premium is currently only at 1%, meaning that probably the IPO will list flat, or maybe even at a discount, or not a lot of premium. Okay, so definitely don't apply to this IPO for listing gains. Okay, but should you apply to this IPO for investment? Should you invest in this company? So let's look at first of all what the company does. So the company is engaged in the business of global digital and technology services, especially with AI, artificial intelligence. Okay, so the company basically helps its customers to adapt to AI, to integrate AI into their business. So this is what majorly the company does, and the company has presence across the whole globe almost, in America, in Europe, in basically in the Middle East also. So the company also has a diverse range of you can say customers from many industries like financial services, healthcare, insurance, professional services, banking, travel also. So basically a diverse range of customers, or a diverse, you can say, like set of customers that the company has. But how has the company performed in the last 3 financial years? Now keep this in mind, is that this is basically dated till 31st December, and not your average basically financials which are dated till 31st March of every year. Okay, so 31st December 2021, the company as of December 2021, the company has made a revenue of 7,200 crores. In December 2022, 9,300 crores. as of December 2023, 10,300 crores, and as of September 2024, 8,800 crores. So the company is not growing that fast, if you see, right? The company is growing, obviously, but not at a very, very great pace. Okay. So this is expected from a big company like this, but still, since AI has taken a lot of, popularity since the last, you can say, 1.5 years, I think the company should have shown at least a good growth in 2024, but that we have not seen. Okay. And at the same time, profit after tax has also been growing steadily. Okay. By as of December 2021, 748 crores. As of December 2022, 884 crores. As of December 2023, 997 crores. So profit after tax has also grown, but not with such fast speed, right? Similar to revenue. So all of this is telling me that the company has not been able to get a lot of revenue boost from AI, as which, at least as I said, since the last 1.5 years, where AI has gained a lot of popularity, we should have seen a good growth. So in my opinion, if you want to invest in this company, invest a small amount of your portfolio. Don't invest a big amount. And if 15,000 is a big amount for your portfolio, just don't apply to this IPO, because anyways the company is gonna get listed almost flat, right? So there's no rush to invest in this company in the IPO itself. Just wait for the company to get listed and then invest a few shares. Okay. Just keep a small percentage of your portfolio in this company. You can get a good growth for the future, not a very high growth. And again, um, since the growth is not very, very high, the pricing of the IPO is not also not very high. So that is again something good about the company, that the IPO is not priced very expensively or anything. Okay. Just in the name of AI. Okay. So I hope you guys understand that. But I think even going forward, right, the problem with companies like which are, investing heavily in AI, or which are, into AI, is that they have to adapt very fast, and you can lose your market edge very fast in especially tech companies. Okay. And companies like which are, going with a lot of trends, with a lot of trends which are ongoing. And AI is also a very, very macro trend right now. So the thing with AI is that, as I said, that the development is happening very, very fast, right? I mean, just look at DeepSeek, right? DeepSeek can do what ChatGPT does, but 97% cheaper. All of a sudden, DeepSeek comes out, right? And makes ChatGPT obsolete. And something else might come out which might make DeepSeek obsolete. So, this is what I've been saying, is that don't invest a lot of this money into a company which is, an AI player or something as of now, unless it has a moat which is very, very specific to it, and which is like very hard to, you can say, recreate or, copy. It is not really worth it to invest in AI right now, especially when we are, at the height of the bubble. Not bubble, I wouldn't say AI is a bubble, but at the height of the trend where things are the most expensive. Okay. So that's why I would say invest a small amount, and that too for the long term. If you don't want to invest, that is also fine. You're not missing out on anything. Just because the company is an AI, developer or AI solutions provider, doesn't mean that it will grow at like 100% every year or something like that. Okay. That does not happen. So overall, until unless you're not really like, if you really don't, if you really want to invest, just invest then, and that to small amount. But if you can, just look ahead and invest in any other company, that is also fine. Just don't invest in this company. Okay. So that is it for the IPOs for next week. Now let's move on to the market analysis for the next week. Okay, so talking about the market analysis for the next week, if you see over here, Nifty moving up 1.3% for the week, Bank Nifty moving up 1.3% for the week, and Nifty just moving up 0.3% for the week. Now, currently also, if you see, this is just a pullback. If you think that the market has become bullish, please do not think so, because this is still just a pullback, right? We are still in a downtrend over here. If you see, market went down, went up, went down, and this is sort of a pullback over here. Like similar to this is just a pullback. So even right now, we are not in a bull market as of now. You might think that this is bullish or something, but as of now also we are not that bullish, and I'm going to tell you why. Because on last Saturday we had the budget over here, right? But still, if you see, the market hasn't been able to perform very well over here. Yes, there was one buying candle over here, but aside from that, if you see, market again came back down and has closed lower for the week, right? And same thing with Bank Nifty also. Although Bank Nifty is slightly more bullish as compared to Nifty, but still not very bullish over here, right? Because if you see, after this buying over here, we haven't been able to see any sort of a follow-up. Now what can happen over here is that in Bank Nifty, first of all, let's talk about it. Maybe we might start to go above this above this level over here, or above this high that has been made, and then we might start to move down over here. Now I'm going to tell you why. Because if you see, Bank Nifty has started to take support from this zone over here, right? So a lot of buyers will now start to take entry, thinking that the market is now reversed and we can go up, right? And they will get a confirmation for their entry above this day high over here, right? Above basically Friday's high. And that is when a lot of buyers will enter, and I think that is when we can see a trap being made, a buyer's trap being made, and then we can start to see a fall in the market. So one thing that you need to keep in mind is that when Bank Nifty moves above 50,600 over here, right? Maybe it might be on Monday itself, Tuesday itself, again depends on how the price action is. Whenever Bank Nifty moves above 50,600, how is the buying coming? Is the buying fast above 50,600, or is it slow? Because if it is slow, then chances are that we will see a breakout fail, not a breakout failure, but a buyer trap being made over here, and we can again start to see a sell-off, and this sell-off can be a new downfall, something like this. Basically, this new down move can be that sell-off over here, okay? So keep that in mind. Above 50,600, how is the buying coming in Bank Nifty? Because if the buying is strong, then yes, you have a 1,000 point range over here, almost 900 to 1,000 point range on the upside, where Bank Nifty can travel. But if the buying is not that strong, then chances are that we will see a new sell-off starting over here in Bank Nifty, which can again take it down to new lows also, probably not a big deal at all. Okay, so that is for Bank Nifty. We'll get into the 15-minute chart and all that stuff. For Nifty, if you see, this is not really indicating very bullishness over here, okay? Why am I saying so? This is not indicating any bullishness is because there is no follow-up in the market over here. If there was really a good follow-up in the market would have continued to move up from here, but there is still not a good follow-up. Even after the RBI rate cut that was announced on Friday, there is no good follow-up. And now if you see, Dow Jones, Nasdaq and S&P, all of them have made negative candles, and very good negative candles at the top itself. So this is also indicating that things are not good in US, which means we'll open with a gap down, and chances are that we will also face a good amount of pressure on Monday at the opening. So if you open with a gap down, the only level that you need to look forward is 23,000. You can say 350 to 23,300. Okay, 23,350 to 300 will be your last support. If we break 23,350 to 300, then chances are that you will see market going back down till at least 23,100. Okay, that is an easy target. And then if we are not able to hold 23,000, then obviously we are looking at a new low of 22,000 to 21,800. You can easily see 1,000 point fall from here in Nifty, because again, as I said, this is just a pullback over here. The market has not reversed and become bullish as of now. This is still just a pullback. Okay, so that is for Nifty. Now talking about Bank Nifty, again we'll also open with a gap down in Bank Nifty. So if we are not able to hit 50,000 over here in at the opening in Bank Nifty, right? And if we continue to sustain below 50,000, then chances are Bank Nifty will easily go till 49,200 first of all, and then from there we might see a little bit of support coming in, and then you will get another chance to take a short over here. Why am I saying you'll get another chance to take a short is because the market is then going to again become pretty bearish, and what will happen is that this would basically just be a pullback over here, right? And what another thing will happen over here is that if you see, there is a double bottom breakout that has happened over here, right? If the market goes below 49,500 with strength, you will basically get a breakout failure over here of that double bottom, and then chances are you will see a very good sell off, which will first of all easily take you to 48,000, and then will also take you to a new low over here in Bank Nifty, hopefully somewhere near 46,800 to 47,000, okay, or maybe 46,800 to 46,500, basically in this range over here, okay. So I hope you guys understand what you have to do in Nifty and Bank Nifty for the next week and how the markets can move. The first couple of days will be very crucial for the markets to decide where exactly we are going to move in the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I hope you guys enjoyed this episode, and I hope you guys learned something new from this episode. But yes, if you have any sort of suggestions for the podcast, if you want something changed, if you want anything, added to the podcast, do let me know in the comments, or you can also DM me on Instagram or LinkedIn. I will definitely make sure to make those changes if possible. But yeah, that was it for this week, and I will see you guys in another week in another episode. Bye bye.